Once you have journalized the sales return to the general journal, it's time to post that return to the appropriate general ledger. It's a lot like what you have done before with a few variations. Let's explore those differences now. First, let's review the general journal for this transaction. You will need to be sure to put all of the amounts in the correct accounts. Those accounts are accounts receivable, sales tax payable, sales returns and allowances, and Vic Sullivan's account in the accounts receivable subsidiary ledger. You will enter $108.23 credit to account number 115, accounts receivable, and subtract that credit from the debit balance total. That leaves the account with a debit balance of $86.80. Next, you will debit the returned item's sale tax of $8.25 to account 220, sales tax payable. You will need to subtract that debit from the credit total, leaving a new credit total of $1,303.55. The next account you will tackle is account 410, sales returns and allowances. This account will need a debit of $99.98, the total price of the two vases. You will add the debit to the debit total, ending with a new total balance of $537.08. Finally, you will need to post to Vic Sullivan's subsidiary ledger account. Here you will credit the return for the items he purchased on March 13th. This should zero out his account balance, so you will draw a line in the balance column for this return. Now you will need to go back to the general journal and document the posting reference for these accounts. You will put the account numbers for each general ledger account, and you will place a check in the bottom of the / line for the Vic Sullivan subsidiary ledger account. While that / line seems a bit tricky at first, it's pretty straightforward to use.